So, guys, welcome back to Stuff on Small Talk. I'm your host, Stuff Ravello, and we are broadcasting from Chicago, Illinois. Shout out to Humble Park. So, in today's video, we're going to talk about retirement accounts, specifically the difference between a Roth IRA and a 401k. So, if you don't currently have either one of these, I highly recommend you open one up. A 401k is a company-sponsored retirement account, so if your company doesn't offer it, you cannot get a 401k, but you can open up a Roth IRA, which is a personal retirement account that you can open up with a bank, Northwestern Mutual, anyone like that. So if you don't have either one, please open one up as soon as you can. And if you don't carry any debt, you should try to contribute at least 15% of your income into either one of these accounts. And yes, you can have both. So let's get right into the differences. So the key difference between the two are when you absorb the tax. So with a 401k, you're taxed when you pull your money out, which is when you're 60 plus, when you're actually retired. So when you pull your money out, that's when you absorb all the taxes. So if you look at your 401k balance and you see $200,000, you will not be getting $200,000. You haven't paid any taxes on it. Your money went in pre-tax, so you absorb the tax at the end. Now a Roth IRA is taxed when you put your money in. So the contributions are taxed, but that means your growth is tax-free. So in your Roth IRA, when you see you have $250,000, that means you are getting $250,000 because you already paid the tax when you put it in. So personally, this is a lot better. In this regard, Roth IRA is the move because you don't feel the tax. Every month when you're putting your money into the Roth IRA, you're not feeling the pain of the tax, and you can afford the tax right now. That money's not even for you to use today. But on the 401k side, when you want to go pull it out and you see this big number, but then you realize taxes are going to take a lot of it, it hurts more. So you rather have your money grow tax-free, which is in the Roth IRA. The next key difference is how much you can contribute to each account. In this regard, the 401k is better. So a 401k allows you to put $19,000 a year. That's the most you could put for a 401k. While for a Roth IRA, you can only put $6,000 a year. That number does go up when you are older, but so there is a big difference there. So that's why if you do have a company 401k, I would if your company matches, put whatever you need to contribute, whatever you need to get that match from your company. And then I would open up a Roth IRA. You want your money to grow tax-free. That's a huge advantage. You'd rather pay the taxes in the beginning than at the end when you want to actually enjoy and take the money in. Another difference is your ability to pull the money out of these accounts, or how liquid they are, which just means how quickly you can convert it to cash. So a traditional 401k, they make it tough for you to pull out your money. And granted, this money is not meant to be used in your day-to-day life. I mean, these are retirement accounts for a reason. They're for when you retire. So with the 401k, they don't let you pull out the money until you're 59 and a half. Or else you get a 10% deduction, and you get all these, and then you get your taxes on top of that, like I mentioned before. So you don't want to pull your money out. Again, this money is for retirement. But a 401k makes it very difficult for you to get that money. With a Roth IRA, for the first 5 years, you cannot touch the money. But after that, you're able to pull out parts of your money. Now, you shouldn't be. I don't recommend that. But in an emergency, which life happens, emergencies happen, it's nice to know that at least that money you could use that money. So a Roth IRA, it's a lot easier to obtain that cash and pull the money out of the account as compared to a 401k. And then the last difference is the investment options. So my friend Josh Arnold, who's a financial advisor, he described it to me like this. A 401k is like playing in a sandbox, and then a Roth IRA is like playing at the beach. So what that means is with your 401k, your company's only going to offer you like 20 options or 10 options or whatever it is, but you have a limited amount of investors you can pick. They say, these are the 10 that we offer. You pick one. And so you're very limited on what you want your money to go to. But with the Roth IRA, when you open up one with a bank, with a mutual, with Northwestern Mutual, Liberty Mutual, they have thousands and thousands and thousands of investment options. You can the opportunities are endless. So there's a lot more options, which makes that better than a 401k, a Roth IRA. So if you're looking for a lot of options and you don't want to be limited, then a Roth IRA is your move. I personally prefer the Roth IRA. Like I said, you want your money to grow tax-free, but the match, if your company offers you a match, you have to take that match. That's free money. They are if they do dollar for dollar or 50 cents to the dollar, you have to take it. Now, my employer does 25 cents to the dollar, which it's not the best, but it's still something, and they're still contributing to what you contribute. So, yeah, that's all I got for you today. Thank you for watching. If you got some value out of it, please drop a like, please subscribe, and until next time.